Based on the historical data and forecast, Bitcoin has shown a significant downtrend, with prices fluctuating between a support of $62,200 and a resistance of $70,300. The RSI consistently remains below 50, frequently entering oversold territory below 30, indicating a strong bearish momentum. The Bollinger Bands show that the price is currently near the lower band, suggesting potential for further decline. Given this analysis, I recommend a short selling strategy. Entry price should be set at $68,800, capitalizing on the recent price action. A stop loss should be placed at $70,300, just above the resistance level to limit potential losses if the price unexpectedly reverses. The initial target price should be $62,200, coinciding with the support level. To refine this strategy, we will incorporate RSI and Bollinger Band signals. When the RSI falls below 20, oversold, consider entering a short position. If the price touches the lower Bollinger Band, it further confirms the downward trend. If the price reaches $62,200, take partial profits. If the RSI rises above 50, move the stop loss to the entry price of $68,800 to protect profits. If the price continues to fall and the RSI enters oversold territory again, consider adding to the short position. The final target price should be $64,600 based on the forecast data. This multi-layered approach allows for adapting to changing market conditions and maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum exhibits a downtrend, particularly evident in the recent forecast period with prices declining towards $1,690. The RSI consistently dips below 30, indicating oversold conditions, with a low of 18.4 on February 6, 2026. The Bollinger Bands also show a contraction, suggesting increased volatility and potential for a breakout. Considering these factors, I propose a contrarian strategy focusing on short-term bounces within the downtrend. We will enter a long position at $1,850, placing a stop loss at $1,720 to manage risk. The initial target price will be $2,020, aiming to capitalize on a potential short-term rebound. To refine this strategy, we will integrate RSI and Bollinger Band signals. When the RSI falls below 20, indicating a strong oversold condition, and the price touches the lower Bollinger Band, it signals a potential buying opportunity. Therefore, we will enter a long position at $1,730, with a stop loss at $1,690. The target price will be $1,860, allowing for a modest profit while acknowledging the overall downtrend. This combined strategy balances risk and reward, capitalizing on short-term fluctuations while protecting against further downside. Based on the historical data and forecast, XRP has been in a downtrend, consistently testing the support price of $1.2. The RSI readings have mostly been below 35, indicating oversold conditions, particularly on February 9 with a reading of 17.4. The forecast for the next week predicts a continued decline, with prices fluctuating between $1.26 and $1.39. The Bollinger Bands show that the price has been trading below the moving average, and the lower band is frequently tested, reinforcing the bearish sentiment. Given these observations, I recommend a contrarian strategy focusing on short-term bounces after the price touches the support level. My strategy involves entering a short position when the price bounces off the $1.2 support level. Specifically, I suggest a short entry at $1.39. A stop loss should be placed slightly above the upper Bollinger Band to protect against unexpected rallies, setting it at $1.41. The target price will be set at $1.2, aiming to capitalize on the anticipated downward trend. This strategy combines RSI signals, oversold near support, with Bollinger Band confirmation, price near the lower band, to maximize the probability of success. This is a high-risk, high-reward strategy suitable for experienced traders with a strong risk management plan. Based on the historical data and forecast, BNB shows a clear downtrend, supported by the consistently decreasing forecast prices. The RSI consistently remains below 30, indicating an oversold condition, especially on January 31, February 5, and February 12. The Bollinger Bands also confirm the downtrend, with the price consistently near the lower band. Therefore, I recommend a short position strategy. We will enter a short position at $623, placing a stop-loss order at $647 to limit potential losses if the price unexpectedly rises. The initial target price is set at $547, aiming to capitalize on the anticipated downward movement. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI dips below 20, it signals a potential bounce, but given the overall trend, we'll use it as a confirmation for tighter stop-loss placement. If the price touches the lower Bollinger Band, it strengthens the short position. We will adjust the target price to $536, aligning with the forecast. This combined approach aims to maximize returns while managing risk effectively. The final portfolio will be a short position at $623, a stop-loss at $647, and a target price at $536. Based on the historical data and forecast, Solana shows a clear downtrend. The price has consistently made lower lows, and the forecast projects further declines. The RSI consistently remains below 30, indicating oversold conditions, but the downtrend persists, suggesting that bounces are likely to be short-lived. The Bollinger Bands are widening, confirming increased volatility and a downward trend. We will implement a short-selling strategy, capitalizing on the expected price decrease. Our strategy involves entering a short position at $82.8. Given the oversold RSI and the continued downtrend, we will place a stop-loss order at $86.9, just above the recent high, to limit potential losses if the price unexpectedly reverses. The initial target price will be $71.6, aligning with the forecast price. If the price reaches $71.6, we will reevaluate the trend and consider adjusting the stop-loss and target price accordingly. This strategy aims to take advantage of the current downward momentum while carefully managing risk. Based on the historical data and forecast, TRON exhibits a downtrend with fluctuating volatility. The RSI consistently hovers below 50, indicating a weakening momentum. The forecast suggests a continued downward trajectory, with prices potentially reaching $0.271. Considering these factors, I recommend a short position strategy. We will enter a short position at $0.278. Given the recent price action and support level at $0.269, a stop-loss should be placed at $0.283 to mitigate potential losses. The initial target price will be $0.271, aligning with the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been trading within the bands, indicating volatility. If the price breaks below the lower band, it signals further downward potential. Therefore, if the price reaches $0.271, we'll move the stop-loss to the moving average of $0.288 to secure profits and manage risk. The ultimate target price will be $0.269, coinciding with the established support level. This combined strategy balances the RSI's momentum signals with the Bollinger Band's volatility insights to maximize returns while minimizing risk. Based on the historical data and forecast, Dogecoin demonstrates a downtrend. The RSI consistently remains below the 50 mark, indicating bearish momentum. The forecast for the next week projects further price declines, with values ranging from $0.0943 to $0.0826. The support price of $0.0877 has been tested multiple times, suggesting it may hold as a temporary floor. The Bollinger Bands are narrowing, indicating decreasing volatility and a potential for a breakout. Considering these factors, a short position is recommended. The strategy will involve entering a short position at $0.0943. A stop-loss will be placed above the upper Bollinger Band at $0.135 to protect against unexpected upward movements. The initial target price is set at the support level of $0.0877, aiming for a quick profit. If the price continues to decline and breaks through the support, the target price will be adjusted to $0.0826. This portfolio combines the RSI, Bollinger Bands, and support/resistance levels to maximize efficiency and minimize risk. Based on the historical data and forecast, Bitcoin Cash shows a downtrend with a forecast indicating further decline. The RSI consistently remains below 50, with several days falling below 30, indicating oversold conditions. The Bollinger Bands are widening, suggesting increased volatility, and the price is currently near the lower band. Considering these factors, I recommend a contrarian strategy focusing on anticipating a potential bounce. We will implement a buy strategy when the RSI reaches an oversold level of 20. The entry price will be $498, with a stop loss set at $495 to mitigate potential losses if the downtrend continues. The initial target price will be $517, aiming to capture a short-term rebound. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band of $470 and the RSI is below 30, we will enter a long position with an entry price of $470. The stop loss will be placed at $468, and the target price will be $507, aligning with the support level. This dual-layered approach, combining RSI and Bollinger Bands, aims to maximize returns while managing risk effectively. The portfolio will prioritize the RSI strategy for initial entry and utilize the Bollinger Bands as a confirmation signal, ensuring a balanced and adaptable investment approach. Based on the historical data and forecast, Cardano demonstrates a clear downtrend. The price has been consistently declining from $0.358 to a forecast of $0.231. The support price remains stable at $0.243, while the resistance fluctuates but is currently lower than previous levels. The RSI consistently hovers below 50, indicating a bearish sentiment, and has recently dipped below 30, suggesting an oversold condition. The Bollinger Bands show that the price is trading near the lower band, further confirming the downtrend. Therefore, I recommend a short selling strategy to capitalize on this prevailing bearish momentum. Our entry price will be $0.262, coinciding with the most recent forecast price and the recent close. Given the strong downtrend and the proximity to the support level, a stop loss should be placed just above the resistance at $0.276 to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.23, a level below the forecast and near the lower Bollinger Band, offering a reasonable profit margin. We will then adjust the target price to $0.231 if the price continues to fall. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Chainlink has been in a downtrend, with consistent declines in price and the RSI consistently below 50, often dipping into oversold territory below 30. The forecast for the next week also suggests continued downward pressure, with prices fluctuating around $7.5 to $8.5. Considering the support price of $7.84 and the RSI currently at 30.3, I recommend a contrarian strategy. We will enter a long position at $7.86, placing a stop loss at $7.55 to protect against further downside. Our target price will be $8.84, aiming to capitalize on a potential short-term bounce. This strategy leverages the oversold condition and aims to profit from a possible temporary reversal before the overall downtrend resumes. To refine the strategy, we will incorporate the Bollinger Bands. The price is currently near the lower band, suggesting potential for a short-term rebound. If the price touches the lower Bollinger Band and the RSI is below 30, we will enter a long position at $7.86. The stop loss will be set just below the lower band at $7.55, and the target price will be the middle of the Bollinger Bands, $8.84. This combined RSI and Bollinger Bands approach offers a more nuanced entry point and a well-defined risk-reward profile, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Stellar demonstrates a downtrend, consistently testing the support level of $0.146. The RSI consistently remains below 50, and frequently dips into the oversold territory below 30, indicating a bearish sentiment. The forecast for the next week projects further decline, with prices hovering around $0.144 to $0.158. Considering these factors, I recommend a short selling strategy. Entry price should be set at $0.158, coinciding with the initial forecast price and a potential minor bounce. A stop loss should be placed at $0.163, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The target price for this trade is $0.144, aligning with the lowest forecast price and providing a reasonable profit margin. To refine this strategy, we can incorporate the Bollinger Bands. The price has been consistently trading near the lower band, reinforcing the downtrend. Given the RSI is currently at $31.9, a slight bounce is possible, but the overall trend remains bearish. Therefore, a refined portfolio would allocate 60% to the short-selling strategy outlined above, entry $0.158, stop loss $0.163, target $0.144, and 40% to a conservative strategy that waits for a confirmed break below the support level of $0.146 before entering a short position with a tighter stop loss and target. This blended approach balances potential gains with risk management, capitalizing on the prevailing downtrend while mitigating the impact of short-term volatility. Based on the historical data and forecast, TRON exhibits a downtrend with fluctuating volatility. The RSI consistently hovers below 50, indicating a weakening momentum. The forecast suggests a continued downward trajectory, with prices potentially reaching $0.271. Considering these factors, I recommend a short position strategy. We will enter a short position at $0.278. Given the recent price action and support level at $0.269, a stop loss should be placed at $0.283 to mitigate potential losses. The initial target price will be $0.271, aligning with the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been trading within the bands, indicating volatility. If the price breaks below the lower band, it signals further downward potential. Therefore, if the price reaches $0.271, we'll move the stop loss to the moving average of $0.288 to secure profits and manage risk. The ultimate target price will be $0.269, coinciding with the established support level. This combined strategy balances the RSI's momentum signals with the Bollinger Band's volatility insights to maximize returns while minimizing risk. Based on the historical data and forecast, LayerZero demonstrates a fluctuating trend with recent price consolidation around $1.8. The RSI indicates periods of oversold and overbought conditions, currently hovering around 49 to 53, suggesting a neutral to slightly bullish momentum. Bollinger Bands show price volatility with the recent price staying within the bands. Considering these factors, I propose a strategy focusing on short-term gains, capitalizing on potential upward movement within the established range. My recommended strategy involves a long position with an entry price of $1.81. The stop loss should be set at $1.47, just below the recent support level and the lower Bollinger Band, to mitigate potential losses. The initial target price is $1.9, aligning with the forecast price for February 17, 2026, and a reasonable profit margin. If the price action continues positively, a secondary target price of $1.88 can be considered, based on the upper Bollinger Band. This strategy balances risk and reward, leveraging the short-term upward momentum while incorporating robust risk management through the stop-loss order. Based on the historical data and forecast, PAX Gold has shown a volatile trend with periods of both upward and downward movement. The RSI consistently above 80 indicates overbought conditions, suggesting a potential pullback is imminent. The forecast data for the next week shows a slight downward trend, initially at $5,110 and gradually decreasing to $4,980. Considering these factors, I recommend a short position strategy. The entry price will be $5,040, coinciding with the recent resistance level and the start of the forecast decline. A stop loss will be placed at $5,110, just above the initial forecast price, to protect against a potential upward reversal. The target price for this short position is $4,980, aligning with the lowest point in the forecast data and providing a buffer against minor fluctuations. To enhance this strategy, I suggest incorporating the Bollinger Bands. If the price touches the upper band, it reinforces the overbought condition and justifies the short position. This combined strategy aims to capitalize on the expected downward trend while mitigating risk with a well-defined stop-loss and target price. The expected profit is $60. Based on the historical data and forecast, Kite shows a clear upward trend. The RSI consistently remained above 60, indicating strong buying momentum, with peaks above 80 signaling overbought conditions. The forecast for the next week projects continued price increases, reaching $0.216. Considering this bullish outlook, I recommend a long position strategy. We will enter a long position at $0.181, coinciding with the start of the forecast period. A stop-loss order will be placed at $0.17 to limit potential losses if the price reverses. The initial target price will be $0.21, aiming to capitalize on the projected upward movement. To further refine the strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading near the upper band, suggesting a strong uptrend. If the price breaks above the upper band, we will adjust the target price to $0.22. Conversely, if the price touches the lower band, we will exit the position and reevaluate the market conditions. This dynamic approach, combining RSI and Bollinger Bands, aims to maximize returns while managing risk effectively. The final portfolio will be 70% long position on Kite with an entry price of $0.181, a stop-loss price of $0.17, and a target price of $0.21. The remaining 30% will be held in cash for flexibility. Based on the historical data and forecast, Pendle shows a downtrend. The RSI consistently remains below 30, indicating an oversold condition, and the forecast projects further price decline. The support price is consistently at $1.13, and the price is approaching this level. Considering the downtrend and oversold RSI, I recommend a contrarian strategy with a focus on short-term gains. We will initiate a long position at $1.11, placing a stop-loss order at $1.17 to protect against potential price reversals. The initial target price will be $1.2, aiming to capitalize on a short-term bounce. To refine the strategy, we'll incorporate Bollinger Bands analysis. The price is currently near the lower band, suggesting a potential for a brief rebound. If the price approaches $1.07 as forecasted, we will adjust the strategy. We will move the stop-loss to $1.05 and set a target price of $1.15. This combined RSI and Bollinger Bands approach aims to maximize profit potential while minimizing risk. The overall portfolio will prioritize the RSI strategy, adjusting the stop-loss and target price based on Bollinger Band signals to adapt to changing market conditions. Based on the historical data and forecast, Sun token shows a downtrend with increasing volatility. The RSI consistently hovers below 50, indicating a bearish sentiment. The forecast for the next week predicts further price decline, reaching $0.0159. The support price is consistently at $0.0161, and the resistance is at $0.0171. Given these factors, I recommend a short selling strategy. Entry price should be $0.0168. Place a stop-loss order at $0.0171, just above the resistance level, to limit potential losses if the price unexpectedly reverses. Set a target price at $0.0159, aligning with the forecasted price for the week. To refine the strategy, incorporate the Bollinger Bands. When the price touches the lower band of $0.0151, it confirms the downtrend, providing a secondary entry point. If the price rebounds to the middle band, consider a partial profit taking at $0.0167. The combined RSI and Bollinger Band strategy offers a more robust approach, balancing risk and reward. This portfolio will be the most efficient strategy to achieve high returns. Based on the historical data and forecast, Axie Infinity exhibits a clear downtrend, consistently testing the support level of $1.53. The RSI consistently hovers below 50, indicating a bearish momentum. The forecast for the next week suggests continued volatility, with prices fluctuating around $1.6. Considering these factors, I recommend a short position strategy. The entry price will be $1.61, coinciding with the first forecast price. A stop loss should be placed slightly above the upper Bollinger Band to mitigate risk, set at $1.68. The initial target price will be $1.5, aligning with the forecast low and a potential further decline. To maximize returns and manage risk, I propose a tiered approach. After reaching the initial target of $1.5, we will move the stop loss to the entry price of $1.61, securing a profit while allowing for potential upward movement. The second target price will be $1.38, based on the recent resistance level. This strategy combines RSI signals, Bollinger Band analysis, and support/resistance levels to create a dynamic and adaptive trading plan, aiming for high returns while effectively controlling potential losses. Based on the historical data and forecast, basic attention demonstrates a clear downtrend. The price has been consistently below the Bollinger Band center and has tested the support price of $0.118 repeatedly. The RSI consistently remains in the oversold territory, fluctuating between 19.9 and 41.2, indicating potential for a bounce, but the overall bearish momentum is strong. The forecast for the next week projects continued downward pressure, with prices falling to $0.111. Therefore, I recommend a short selling strategy with a focus on capitalizing on the continued downward trend. My strategy involves entering a short position at $0.136. The stop loss will be set slightly above the upper Bollinger Band at $0.145 to protect against a potential short-term bounce. The initial target price is set at $0.118, coinciding with the support level. If the price breaks through the support and continues to fall, I will adjust the target price to $0.111 based on the forecast. This strategy combines technical indicators with support and resistance levels to manage risk and maximize potential returns in a bearish market. The RSI indicates that the asset is oversold, but the overall trend is still downward. Based on the historical data and forecast, Aster exhibits a downtrend with significant volatility. The RSI consistently dips below 50, indicating a prevailing bearish sentiment. The forecast for the next week shows prices fluctuating around $0.59 to $0.63, suggesting continued sideways movement with potential for brief upward corrections. Considering the support price of $0.605 and the recent low of $0.468, a conservative strategy is warranted. I recommend a long position entry at $0.572, placing a stop loss at $0.535 to mitigate potential losses if the downtrend continues. The target price for this trade should be $0.648, aiming to capitalize on potential short-term upward movements while acknowledging the overall bearish trend. To optimize the portfolio, I will incorporate a Bollinger Band strategy. When the price touches the lower band, it signals a potential oversold condition and a possible bounce. Given the forecast price of $0.593, which is near the lower Bollinger Band, a long position entry at $0.593 with a stop loss at $0.567 and a target price of $0.635 could be beneficial. Combining both strategies, prioritizing the RSI signal for initial entry and leveraging the Bollinger Bands for short-term adjustments, should yield a balanced and high-return investment portfolio.